G'day there. Welcome to the closing bell on the 9th of August for me in the afternoon. And what a hell of a week that was. Nikkei crashing, the US yen, well, falling heavily, which means the yen spiking massively as carry trades are unwound. And we learned a big lesson, I think, during the week, which was that the carry traders weren't just investing into US bonds to capture the difference in the yield between Japanese yields near zero and US yields up near 5%, which is what I thought was actually going on. That's a sensible way to go about it. Leverage up and capture that easy yield. But no, they were actually taking that money, cheap money, in Japan and investing it into, let's say, the Magnificent Seven. So really, we can look at the rally that has been going on in the Nasdaq, and especially the Mag 7 stocks, let's say, over the past year. With US rates up near 5%, I think everyone was scratching their head going, well, what the hell's going on here? Um, Economy should be slowing down, inflation coming off the boil, but what the hell are those stocks going vertical for? With rates still up near 5% and people still worried about inflation. So that head scratcher may have an answer now. Now that we've seen what's happened when Japanese interest rates went up a little bit to save the yen from those major levels, which I showed you a few months ago. I can show you them again. So they've tried to raise rates to save the yen, and then we've got the bad data in the US, unemployment data, ISM data last week, very important data, which is weakening off. So all of a sudden, US rates went down rapidly. Japanese rates were going up. So that yen, when it was looking like it was going to crash, basically, has completely reversed. And that's put those carry trades under pressure. And then we've seen a real dumping. And so I want to show you a chart to get a sense of what's been going on. It'll inform, the markets going forward, saying, well, maybe a lot of hot air is in that Nasdaq as a result of the disparity between Japanese and US rates. So that is something to keep in the back of your mind that more heat could come out of the market. But Japan came out and said, after taking fright, after the Nikkei collapsed 10% in one day, we won't raise rates when the markets are unstable. But I mean, the instability is there due to the rates being at zero. This is a story of Japan since 1989, isn't it? They didn't take their medicine then, and they've used monetary policy since to try to keep things going, and they've still got rates at zero, and the rest of the world has rates way higher, and that creates instability, and which we're starting to see unfold in front of us, aren't we? So let's have a look at that. And then I'll just cover off the S&P and ASX to give you levels where you can watch going forward when you can start to get a bit more nervous because things are still trending higher. So there's no need to freak out just yet. Let's see what happens. Has Japan turned off that problem for now? Do the carry traders jump back in? So watch that US yen. See how it moves. It goes back above 160. Watch out. They may be forced to raise rates if they do switch on this carry trade again. Because that could happen, couldn't it? All of a sudden, things can turn back up and rally like anything if the Bank of Japan says we're too scared to raise rates at all. So, anything can happen from here. So let's jump, understand what's going on, and look at those levels. So this here, what I'm showing you is on this chart above is the US 2-year bond yield minus the Japanese 10-year yield. Now, I'm using the 2-year because that's a good proxy of, where US rates are and where they're expected to go in the short term. And look, Japanese 10-year, I don't, it's all at zero, isn't it? So I don't think it matters too much the disparity I'm using there. I just thought it would make things clearer for you about how those rates have moved, where you had, during the COVID crash period, they were very close to each other with US rates down near zero. And then we saw this huge run higher, with US yields going much higher than Japanese yields. And down below here, I'm just showing you on that yellow one is the NASDAQ, that yellow line. And then we've got the US yen is this, what color's that? Cyan. Um, and you can see what I wanted to point out was uh, when rates started rising rapidly, as you'd expect, the NASDAQ had a sell-off back in 2022, didn't it? That is what makes sense. That's what everyone would expect because those tech stocks, a lot of them, looking at earnings coming in future years being massive and then getting a net present value of those. The interest rates you use for the net present value calculation is important. So if rates are near zero, that's what fed the huge run in the NASDAQ in this period. As rates dropped, all of a sudden, NASDAQ took off like a rocket. Then rates went up. NASDAQ fell in a heap. But then this strange thing happened. The NASDAQ turned and rallied incredibly strongly, didn't it? And it wasn't just NVIDIA, Microsoft, all of them, that Mag 7 stocks, they all went ballistic. So if we look, that's where the head scratcher came in. Rates have been kept very high, and you can see versus Japanese rates up around 4.5%. And yet the NASDAQ had turned and had a huge run, which was a bit of a head scratcher. So now, when you look at the US yen, which is that one there, and you can see the US yen as it sold off. Look at the correlation to the NASDAQ and see from a few months ago how perfectly they moved in unison as the rates between Japan and US fall. So this could now be on a situation where it could head back in that sort of direction, which will strengthen the yen. And you can see there a big drop. That was a big drop in the US yen. So a big strengthening of the yen, forcing those carry trades to unwind. And you've got the NASDAQ starting to tip over. So if we have had a big run and a lot of that, obviously there's trend following in the NASDAQ as well. It's not going to be all carry traders. But if there has been a lot of buying on the back of that, and we do see rates coming off the ball rapidly, there could be more to come. So there's, from that point of view, you're saying, yeah, well, this is an interesting development to understand. And there's certainly been a switch. Thing has changed where US rates probably are going to start dropping. But I guess you wonder, is Japan then going to completely back off because they're so scared when the Nikkei crashed in the way that it did? So it's an interesting development to understand that is what is going on, which then helps to sort of inform things as you go forward, keeping an eye on that US yen and knowing that there could be more to come. So let's jump to the charts just quickly. So let's just have a look at that NASDAQ to get a sense of, what's going on, because, it's very hard when you've got all these articles saying, oh, crashing, everything's all terrible. So really, there's sort of a three-step process to things turning down, I guess. The major one you're worried about is when the long-term trend goes down, and we're miles away from that happening. So, for me, that 10-month exponential crossing under the 20-month simple, hasn't been many over the last however many decades. You can see that that 10-month exponential still well above the 20-month. This is still in very strong uptrend at the moment. And often um, the uptrends take time to turn around. Like it can take months, months and months of stuffing around, even a year or two. Like the way that the bull market ended in 2000 and 2007, 2008, there was a good year or more of um, going nowhere. You can see that one had a few years of going nowhere. But even if it is going to have a short, sharp sell-off, it often takes time. It doesn't just turn down rapidly. But uh, what I can keep an eye on is things like the slope of that 10-month exponential, for example. When it starts to fail below the slope of the 20-month, then you're starting to get a bit concerned. And it is sort of getting to that point. It's not that far off. They're being basically saying, well, you're either going to go sideways for a while here or down. I guess that would be the major thing that I could say from that happening. The 10-month going below. That's the record of the slope of the 10 and 20 months, that indicator there. And you can see it just went through a period of pretty much going nowhere for a long time. So it's not telling you it's about to crash, but it is saying, well, watch out here. It's just not going to do much. And it's when the slope is above that, you usually have the nice, strong runs, don't you? When things can really get going. So I guess it sort of looks like that could be on the cards, but certainly no reason to panic yet. The other thing that I was showing you a few weeks ago, saying, look, this is a spot where it can turn down from the NASDAQ. And, uh, you'll notice um, if I just show you the range I was looking at on the NASDAQ, these ranges often the areas outside the range. You've got to keep an eye on them. That 25% and 618, it's just an area where you can see reversals, which can then even head back to the midpoint, the point of control. So that's why the fact that it has turned down from this area is of interest to me, because it says watch out when you do get reversals from that zone. That can be when the market is fully bullish, thinking that it's going to do nothing but go up. Everyone's long, but it's still under the gravitational influence of that point of control, that midpoint. It hasn't actually fully broken away yet. So that's one thing to say, well, watch out. But you would want to wait until the month is over uh, before, saying, yes, we do have a monthly sell pivot. You can see here in the past, that was a pretty good indication before the big sell-off. We got one there, which only lasted for a little while, and then we got the buy pivot there. Within the long-term uptrend, I actually told you at the time, this is now 100% bullish, and we've taken off. But here we are. Potentially August could be the monthly sell pivot. And if that happens, then that's the first step to say, well, now you've got to just be a bit wary that things could either go sideways or start to sell off. And of course, it's not until you can see the low from this big sell-off this week was actually bang on that 10-month exponential. So as far as the long-term trend's concerned, it's still trending higher, still holding above the 10-month and bounced off it quite strongly just recently. So it's not until it really cracks underneath there. So that's going back below this week's low. Under there, you do have a bit more things to fear that we could have a bit more of a mean reversion event going on. So as long as we stay above there, that low is 51.20. So it's still 250 points below where we are now that it's starting to rally. But yeah, if we turn back down and the selling returns and see that yen moving and it really does start to bucket, that's when you could start to say, well, watch out. It probably is going to head to that 20 month. And then you're sort of saying, wow, it's going back below the high from 2022, and that can take months to play out. So this is just how markets move. That could take 6 months. And it could ultimately do that and then turn back up and be fine, if rates really start dropping. So that could be something that's coming, it could be closer to a bit of a correction because if this is hot air, if this rally is the US yen more than anything else, and we're going into a US slowdown and we do see a reversal, rates really start coming off the boil, well, maybe the heat will come back out of that rally because it was due to the disparity between US and Japanese rates. So, we do have to be aware of that. So, um, I guess the point being that, if you're bullish, you're long, you're not panicking right now and saying you must get out and things are about to completely collapse. It's still in long-term uptrend, bouncing from major support. Let's see how the month plays out. Because it could rally all the way back, and that monthly sell pivot could be negated, and it could race higher. So it's still up in the air, but it is in a spot where I'm wary, I guess, which is what I said a few weeks ago, that there could be more coming. So I think now we've just got to see what happens with that US yen, not freak out too much, and if it goes back below those lows at 51.20 in the S&P, then I'm going to be getting a bit more on a bearish footing. And let's look at the ASX. So before we just have a look at the levels on the ASX that you need to keep an eye on, just want to point out in that top right corner for you of the video, there's a little eye you could see there, or some text. That's just to take you through to a document I've written for you for people watching the closing bell. It really is just 6 lessons that I've learned over my career of 30 years of trading. It really will give you an idea of my background, what I've been up to, how I understand price action, why things happen the way they do, false breaks, mean reversion, and how you take advantage of that to get yourself into real win-win situations in your trades. Basically taking part profit, managing where you're putting your stop losses, and creating free call options, which I sort of call planting seeds in the market. So you're basically managing your risk very efficiently when you're trading. So if you want to learn a bit about that, please click on that link in the top right there, or look below the video. There'll be a link in the YouTube section, in the information section below the video. You'll be able to find it in there. Have a read through. You'll certainly have something to learn about trading if you do have a look at that. Moving on to the ASX 200. So this is the ASX 200 on the monthly, and I just want to point out, where things could get a bit nervy, where you should be a bit more wary of what's going on, and I want to point out why. So looking at this over, many years, you can see there the old high from 2007, and as you go along, I just want you to note the fact that prices will very often retest old highs and have what's known as the false break, where you can see the breakout, which gets people nice and bullish, and then the failure, which can then be the beginning of a big sell-off. And I just point that out because that's sort of how markets move. They really do move in a series of false breaks and shakeouts. And this is what you've got to get your head around. See, raising above the highs, everyone gets bullish, people get shaken out. Goes back above the high again, looks fantastic, people get shaken out. Goes back above the high, nice rally, everyone gets long, thinks the market can do nothing but go up, 2020 crash. So this is sort of what happens again, rally. That was the big sell-off in 2022. So just be aware that this is how markets move. And that's why I look at these major highs and say, well, if things roll over from here and create that false break, that's when you've got to be wary of the big correction. So looking at the way the ASX moves and where the opportunities are, just imagine, this channel as, the long-term sort of growth of the ASX. Let's say that channel is going to continue. The best opportunities, aren't they, are after the sell-off and then turning back up. After the sell-off, turning back up. After the sell-off, turning back up. Right, so there's often these opportunities that come along with these big shakeouts. And here again, we had a great run back in 2021, which we captured. So what you're looking for is these false breaks that shake everyone out. And then you're waiting for the signs to get back on. So I would say for you is be aware that this old high from a few years ago, around 7,500, which is also then back around where the 20-month is, which is also around there. I believe the 200-day moving average also down around there. So below there, if we stuff around here for a bit and then the selling hits and it breaks below that 7,500, we can see quite a sharp downturn. But you'd want to have some powder dry ready to buy, basically, looking at yet another retest of the low of that multi-decade channel that we've been in. So it's not something to say, watch out, it's all going to crash. It's to say this is just how it moves. Lots of people getting long through here. They often get shaken out. There'll be major support, as you've seen. If I'm looking at the Bollinger Bands against that 20-month, that area, 1 to 2 standard deviation below the white lines you can see there, so often providing great support. So, imagine something like that could happen. So that's really where it is at the moment, is a failure below 7,500 is got to say, watch out. But the long-term trend is up and it's still holding above the 10-month, isn't it? So let's give it the benefit of the doubt for the moment. Have that line in the sand below the market where you start to say, okay, well, watch out, this can actually tip over, and see what happens. What if it turns around and just rallies madly? That is possible from here, looking at that long-term sort of structure. So that's, I guess, the major point. No need to panic just yet. If it heads below 7,500, watch out. It really can correct, but you're going to be a buyer on the back foot, aren't you? So that's really how I see it. Definitely keep an eye on that US yen. If you see it, the US dollar rallying much higher, like back to that 160 level against the yen, watch out because the Japan may be forced to actually raise rates if the yen does collapse again. But apart from that, I guess it might be on again for a rally for a bit. All right, well, that's enough for this week. And please be sure to check out that report I've put together for you. Just click on that little eye in the top right corner of the video and it'll take you to the document. Just click on any of the links that are there through to the lessons. And I really hope you do enjoy having a read of that. You'll certainly learn a lot more about who I am, what I'm about, and should be able to really help your trading in future too. All right, cheers. I shall talk to you next week.